The latest T-Tracker results of REIT fundamentals are out, and my colleague Calvin Schnure is here at the NAREIT headquarters to fill us in on what we learned last quarter. Calvin, give us an idea. What did we see?
REITs posted very solid performance last quarter. Funds from operation was up 7.5% over the previous quarter. That's 20% higher than it was a year ago. Almost all of the property sectors saw an increase in funds from operation quarter over quarter. 9 out of the 11 sectors had a quarterly increase. So these are quite solid results. There are several other measures that we look at. Same store net operating income rose 3.6% over a year ago. That's a slight acceleration from the prior quarter's results. So we're seeing strong earnings growth pretty much across the board among REITs.
Calvin, that's pretty robust growth. Do you find those results surprising?
Those are solid results, but no, it's not surprising. One of the big questions, of course, these days has been about the level of construction that's coming along. Many people are concerned about construction, but you have to keep in mind that demand growth has been much stronger than the new supply that's been coming along. We've seen net absorptions continue to outpace completions across most of the property sectors. Not multifamily, the apartment sector has softened a bit, but overall we've seen occupancy rates rise to a record high. In the fourth quarter, properties owned by REITs reached a record high occupancy rate of 94.5%. So that's a really solid fundamental supporting earnings growth going forward.
And this is the first time that we've heard earnings news since the new real estate sector under GICS was created. Did you see any impact there?
Well, this actually is very important news because when MSCI and S&P created the new GICS sector, they were recognizing that real estate is its own headline category. It had previously been included within the financial sector. And equity REITs compose practically all of this sector. And they had earnings growth in terms of funds from operation of almost 14%. It was up 13% over 4 quarters. Now, that compares with growth of operating earnings per share of a bit less than 10% for the market cap weighted S&P 500. In fact, the real estate sector, as measured by the equity REITs and their growth of FFO, was the second fastest of all property sectors within the GICS system in the fourth quarter.
Well, Calvin, thanks so much for your time.
My pleasure.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.